Memo, The American Premium Bubble, a Thought Experiment. March 9th, 2025. To our partners and friends. I find myself thinking a lot about micropsychology these days. The longer we stay in this business, and as partners, the more psychological markets cycles we will go through. Let's just take in the last 30 years or so. There was notable market crashes such as the dot-com crash in 2000, the GFC in 2007, the COVID crash in 2020. But there's also isolated crashes that are maybe smaller, such as the oil crash and somewhere in the mid-2010s, Eurozone crash, and even the Indian correction in 2019. But today's market environment has many outspoken investors raising parallels to some of the attributes that we have today and to the panics of the past. Take in the attributes of high concentration in the S&P 500. Companies such as Apple, Meta, Nvidia, Alphabet, etc. have huge concentration of the S&P 500. Similar time, you could look in the Nifty 50s in the 1970s, where there was a common belief that no valuation is too high for the best businesses. Now, another attribute that's similar maybe is the exuberant spending on AI, or companies that have AI in their name or even in their presentations, and maybe business models that haven't fully proven in, similar to the dot-com. However, what we must admit, which is different this time, is that the companies that are ruling the S&P 500, or mostly the Fortune 500 in the world, are one of some of the best businesses we've ever seen. Take an example of Google and Meta having one of the best advertising businesses monopolies on the web we've seen, and continuing and profiting heavily from that. We need to think of ourselves. History might be different this time, but history never repeats itself. But it does rhyme. And a lot of the metrics that we look at the market valuations of markets as a total are elevated near historic times. So maybe there is a time for a correction or a trigger of something happening. So I look at these elevated, and especially looking at the American businesses, I have a thought experiment. What if the next trigger of the next panic is not a failed financial institution or maybe exuberance debt? What if the triggers the lost confidence in the current worldview of the United States? Or maybe even the United States' stability as the dominant power of the world, but not even that, but in what it means to the rest of the world. This new president could change and influence the perception of the American influence around the world, and markets might reduce what I call the American premium. Now, the American premium stems from the high valuations that we pay for assets in the United States. Currently, the S&P 500 trades at a multiple of approximately 27, significantly above the historic average of 16. Compare this to international markets. Japan's markets trade around 20, Europe's around 16, emerging markets at 14. Here in Canada, we're around 19. Very elevated levels, but even then, the United States, we pay a premium. This gap in valuation is what we call the American premium, and today I would like to share some thoughts on recent crossed my mind. Not as a market prediction or even a pessimistic doomsday scenario call, but more of a question considering how America is going to survive the American premium stress test. Now, the American privilege did not emerge by accident. America's rise to great power status was accelerated by the Marshall Plan after post-World War II, and it transformed the United States into a security guarantee and a lender of last resort to much of the world. This created an informal global agreement that the United States would enjoy privileges not granted to other nations, but in return would guarantee security, fund enormous military expenditures, and provide foreign aid worldwide. This possibility is inherently linked to American influence, as demonstrated by its control of world reserve currency, and what allowed the United States to develop the world's most consumable population. With this bargain, it fueled America's economic dominance for decades. However, the United States was also benefit from its unique geographic position, surrounded by two oceans, which allowed the period isolated development, even to this day, and there is no external pressure to maintain technological superiority, for example, in aspects of infrastructure. Even today, small nations like Singapore surpass the U.S. in transportation efficiency, healthcare services for the general public, and other infrastructure metrics. Yet despite these limitations, America's business environment, market size, and development potential have created an unmatched ecosystem for enterprise growth. For decades, global investors have willingly paid a premium for American assets, and they have had excellent reasons for it. For example, the U.S. markets have delivered fantastic historic returns. America boasts the world's strongest and most innovative economy. The dollar remains the global reserve currency and transaction medium. The U.S. serves as the world's financial broker and business safe haven. American consumers represent the most valuable market on earth. U.S. markets offer unmatched liquidity and depth. In addition, the United States also enjoys structural advantages that are often overlooked. Exceptional talent magnet for global human capital. Approximately 40% of Fortune 500 companies were founded by immigrants or their children. Superior environmental and research ecosystem that contributes to continuously drive innovation. A legal system that, despite its flaws, provides better investor protection than most alternatives. Flexible labor markets that allow for efficient resource allocation, and unmatched venture capital infrastructure that turns ideas into enterprises. On one hand, this premium has become so accepted it feels like a law of nature, but nothing in this market is permanent. On the other, sometimes the most dangerous words are "it is different this time." So here's my question. What if the trigger of the next market upheaval is not a concentration of what happens within America's borders, but rather a change of how the world perceives the United States? We have seen market indicators today that echoing warning signs from previous crises, such as internal factors of interest rates, inflation, corporate earnings, the wealth gap. But what about external perceptions? The Trump administration has embarked on a path of greater nationalism, bringing production back in the United States and questioning long-standing military commitments abroad. Whatever politics may be, Trump represents the democratically elected will of the American people throughout his legislation, and his policies affect the worldwide perception of the United States. What if these policy shifts, directly and indirectly, create an environment of instability that becomes self-fulfilling, that can drive investors out? What if they begin to unravel the very global arrangement that have underpinned America's exceptional position? Investors crave predictability and stability. And what the rules of the game appear to be changing, it becomes extraordinarily difficult to make assumptions necessary for valuations. The premium that America has enjoyed for so long could contract, not because America itself has fundamentally been altered, but because the perception has. Given that, add in America's mounting debt obligation, increasing political polarization, and you have the potential ingredients for a consideration of the U.S. premium. I'm not suggesting the U.S. is a bad place to invest, far from it. I'm simply wondering whether we might be seeing early signs of troubles in paradise, a potential trigger. As always, the most important thing are the business's fundamentals and not the global speculations of how the world might change, in which we don't know what we don't know. I offer these thoughts not as a conclusion, but as a starting point for a discussion. This has been a fun thought experiment. It is not a sign of changing investment strategies or principles here at 18th Degree Capital, but more of an assessment and enjoyment of looking at the world as a whole and trying to understand what's happening in it. Thank you. This was Daniel from 18th Degree Capital.